Hello, everyone. Today, we've gathered over here to understand what are some important crypto market investment trends in 2025. Let us understand what are the factors that affect cryptocurrency. Let us understand what are the market trends, how to invest, where to invest, and some legal and taxation related compliances which are necessary for each one of us as we trade in crypto. So, with this, I'm going to quickly share my screen and I'm going to uh, start my presentation for now. So stay tuned and here we go with the presentation. So first and foremost, what are some of the factors that affect cryptocurrency prices in 2025? Some major announcements which are reasons for us to believe that the prices may increase in future are spot ETFs. BlackRock has announced that it is going to invest in spot ETFs. Secondly, central bank crypto reserves are a reality. Various central banks will now start parking money or parking the funds in crypto, and of course these are going to be those cryptos which have a store of value. Let's say for example, we can take something called as like Bitcoin or Ethereum as a store of value. Third important factor which in my opinion is going to actually affect uh, the prices of crypto is retail inflow of money. Small retail investors will start parking money in crypto, and that's going to lead to a major crypto revolution from an adoption perspective. So if you'll see a lot of people coming in and parking the money in crypto, and that's going to also affect prices of crypto. And then of course there are political factors and geopolitical factors which affect the prices of crypto. For example, President Trump, after his election, it led to an increase in prices of crypto, and he's a pro crypto president. Even during his election campaign, he had said that he is pro crypto and he favors crypto. So political factors like these do affect prices of crypto in the long term. And yes, having said that, please make sure that please be informed that this is neither professional, legal, financial, or investment advice. This is purely and purely from an educational perspective for the knowledge of everyone. Then going forward, what are some crypto market trends for 2025? I think I think some major factors for 2025 are AI projects. Anything in AI is working really very well. Anything related to development of AI, anything related to uh, propagation of artificial intelligence, whether AI in computing, AI in designing, AI in accounting, also for that matter. Anything, any project related to AI is it seems to be doing pretty well. And then there are meme coins. There is absolutely no logic or reason behind why meme coins exist or why meme coins go up or down. They're purely meme coins and they're purely and purely as a fun trading activity. So if anyone wants to park money in meme coins, that's from that perspective. And then there are exchange based tokens. So a lot of exchanges have come out with their own tokens. So in order to reduce your price per transaction, if you're holding those tokens and if you and probably if you stake those tokens, your price per transaction goes down, and that's again a utility token. Depending on how well the exchange is performing, the number of countries that recognize that exchange, the licenses that that exchange has, are some of the factors which affect exchange based tokens. And then there's DeFi, TradeFi, GameFi, which has been for quite some time now. Decentralized finance has a good future for now. DeFi and its integration with trade finance. So this is DeFi and TradeFi are actually a bridge between traditional financing and modern financing. And then there's gamification and GameFi, which where tokens are again used as a utility to advance your objectives in the game. And another space or an interesting space to look out for are RWAs, which are real world asset backed tokens. So traditionally, people would have invested money either in gold or in land, and now as technology advances, tokens are also representing ownership of gold and land, which were traditional assets, now integrating with new world assets. So real world asset based backed tokens are also something which would see a good rise in 2025. Now, where and how to invest is a question which a lot of people ask as to how can they invest and where should they invest. So first and foremost, I think one needs to assess his or her own risk appetite. How much capital do you have? How much can you afford to invest in a highly risky asset? So cryptos inherently and traditionally are extremely high risk assets. So if you have that risk appetite, then only you should consider investing your own money in such kind of assets. Second thing is, how do you on ramp and off ramp money into crypto and from crypto? So how do you convert your bank balance into crypto, and how do you then sell your crypto and convert that back into a bank balance? So that's known as on ramping and off ramping. So in order to on ramp and off ramp, you will have to check your local laws and regulations as to which exchanges, which centralized exchanges are registered, and which are and through which are you permitted to deal and trade in your country. Since this is very country specific, I will not give any generic answers over here, but yeah, there are various ways and means by which you can on ramp and off ramp. Let's say you are comfortable dealing with centralized exchanges. In that case, you will be able to use your banking channels to load money. And hypothetically, let's say that if you're not comfortable using centralized exchanges, and then there's something called as decentralized exchanges. So in decentralized exchanges, you can ask a friend to fund your wallet, or you can ask a friend to sell some of his crypto or her crypto and fund your wallet. So these are the different types of exchanges through which you could invest in crypto and get some exposure in crypto. Then comes the question about holding capacity. So when we talk about holding capacity, since crypto is highly volatile and there can be fluctuation not on a monthly basis or weekly basis, but daily and every hourly basis. So you should have a good holding capacity, because in the long run, people have potentially made good returns. Not everyone makes good returns, but yes, people who've traded properly and who've applied a lot of mind and have done a lot of research do end up making good returns. Again, this is what I have seen and what I have observed amongst a lot of crypto traders. And then uh, availability of funds, right? So what is the quantum of fund that is available with you for investing in crypto? That is something which you will have to assess by yourself and for yourself. So, and again, this is not legal professional investment or financial advice, but having said that, if you have surplus funds and if you think you don't need those funds for the foreseeable future, or if you don't mind even if you had risk all that money and lost all that money, then only you should invest money in crypto. Because as I said, it is inherently extremely risky. It is not for the faint hearted. You may see fluctuations of 40-50% up and 40-50% down in the same day within a period of 24 hours. And then finally, let's go to legal and tax compliances. So most countries have taxation on crypto transactions. So profits that you earn or accrue or arise, you would have to pay taxes on them. Again, this changes from country to country. And then there are some countries where there is no personal taxation on crypto trading. So people who deal very frequently in crypto and who've had a good track record of earning a lot of money in crypto, they have traditionally moved from countries of high tax jurisdiction to countries where there is a low tax jurisdiction. So this is a trend which I've observed over the last couple of years. And then in some countries, trading in crypto is legal. In some countries, trading in crypto is absolutely illegal. And in some countries, it is neither legal nor illegal. So let's say that a country will say that, you know, we're going to tax you, but we are not going to tell you whether it's legal or illegal. And then there are some countries which say it is completely legal, but we're not going to tax you. So depending on each and every jurisdiction, you need to assess this for yourself as to where and how should you invest and what are the ways and means by which you can invest. Now, coming to crypto trading strategies, again, this is not investment, legal, financial, or professional advice. This is purely and purely for educational purposes. And this is something which I've observed from other people, from other large crypto traders that I've followed over the years. This is the strategy that they have used for themselves, and this is what they have told their followers. But again, having said that, I will give my caveats and disclaimers. Please assess your own strategy and then only invest. But for educational purposes, it is good to share information. So this is what people have done. And from an educational perspective, if you want to do, again, it is absolutely up to you as to what you wish to do with your money. But this is what people have done. Now, let's go, and you may take a screenshot of this if you want to save this for future references or for future purposes. Yes, as I said, take a screenshot of this. This may be useful for you. This may be helpful for you. You never know how it's going to benefit you or adversely affect you. So people have traditionally parked money in Bitcoin and Ethereum, as I said. So for people with low risk appetite, generally they put around 30% in Bitcoin and Ethereum. So the figures that you see are first, the figure is the figure with people who have a low risk appetite, and the second figure is for those who have a high risk appetite. So for those who have a low risk appetite, generally what I've observed is people put 30% Bitcoin and Ethereum, 10% in meme coins, 10% in DeFi and TradeFi projects, 15% in exchange-based tokens, 15% in real-world assets, 0% in GameFi projects, almost 5% in AI projects, and they keep a contingency of around 15% should they have to buy more, or should they have to average out or use a strategy called as dollar cost averaging in case the prices of the existing cryptos fall. But people who are in a high risk, who use a high risk strategy or have a higher risk at tolerance, then in that case they would put only 15% in Bitcoin and Ethereum. They would put 25% in meme coins. They would put 5% in TradeFi and DeFi, almost 5% in exchange based tokens, 5% in RWAs, which are real world asset based tokens, 5% in GameFi, almost 10% in AI, again because it's highly volatile and could potentially give good returns, and they generally keep a 30% contingency. Now, the reason why they keep a 30% contingency is because since they have invested in high risk tokens, they would need that money to average out the cost should the prices fall down. Now, again, this is what I have observed, and this is what I'm sharing for an educational purpose. Now, moving forward, let's understand what is a long term versus what is your strategy. Or would you hold for the long term, or would you hold for short term? Are you doing long term investments, or are you doing short term trading? Or were you a long term investor converted to a short term trader, or are you a short term trader, but since your price is around, now you've become a long term investor? So the holding period will define whether you're long term or short term. In crypto, generally a good holding period is approximately a year to consider as long term investments. In traditional assets, long term investments are generally 3 years, 5 years, or 10 years. But in crypto, because of its nature and its inherent volatility, in crypto 1 year is considered to be long term. Also, you need to understand what is the total what is your total time that you can spend for research. So it is extremely important to do your own research before you invest in crypto. I generally never give any form of recommendations for crypto, but I will give you information which will help you to take your own decisions in a well-informed manner. Then moving forward to whether it's a whether so always do your own research, and then whether understand whether you're a full-time trader or investor, or versus a part-time trader or investor, because it is important for you to tap the market at the right time. So if you enter at the wrong time and if you exit at the wrong time, you will not be able to make money. So if you potentially want to make money, you will have to dedicate and devote a lot of time towards research and also monitoring prices on a daily basis. So that will help you to understand your risk appetite and your investment strategy. Then we go forward towards technical analysis. There are various tools and strategies available for doing a technical analysis. So some of them are listed over here. There are many more, but I've only listed the ones which are widely used and also used by most of the people and easily available online. So historical price data is something that you should ideally check before investing in any cryptocurrency project. Second are the trend lines. Understand what is the movement of that particular crypto, whether it is going up, whether there is an upward trend, whether there's a downward trend. So understand those things. And then there are moving averages. You have a daily moving average, which is known as DMA. Then you have a monthly moving average. So understand whether the price of that particular cryptocurrency is above that average or below that average. Check those averages. Then you need to do a volume analysis. How many people are dealing in it, whether it is closely held, whether it is widely held, the number of people who are holding these tokens. Again, all of this information is freely available across the internet for any crypto that any major or large crypto or well recognized crypto that you're dealing in. Then there is something called as support and resistance levels. So let's say there is a support for a particular crypto at a particular level, which means that the price may not fall below that particular support level. So that support level is for the downward fall or the downward level below which the price may generally not fall. And then there are various support levels at various price ranges. And then there is a resistance level where it is assumed that the price of a particular crypto may not cross that in a particular price range. So if it breaks that resistance, then the chances are it will go even higher. If it breaks a support, the chances are it will go down even more. And then there are candlestick charts. You will have your red candles and green candles, which will indicate the price and which will give you insights about the upward or the downward movement of a particular crypto. And then we move forward to other points such as understanding the risk reward ratio. Most people, this is the most common mistake which I have observed among people who invest in crypto, is that they do not understand the risk reward ratio. So if you're looking for stable returns, steady returns, government backed securities are the best form for you. But if you're looking for higher returns, then you will have to then people go for crypto. So if your risk appetite allows you to go for a high risk investment, then only you should invest in crypto. And since there is a potential for higher risk, there are also higher returns. So if you answer traditional principle, right? So understand the asset class that crypto is inherently a highly risky asset class. And of course, because of the high risk element, there is a potential that you could get higher returns. But there is no assurance or guarantee that anyone would make returns for sure. So never compare your risk reward ratio with anyone else's risk reward ratio. What you actually need to do is you need to have risk adjusted returns. So depending on the risk that you have taken in the asset class that you select, you should calculate your returns with other similar people in that industry or in that crypto or in that project. So it is extremely important to not compare your portfolio with someone else's portfolio, because you don't know what is their strategy, you don't know what is their risk appetite. So always concentrate on your portfolio rather than looking at other people's portfolio, and understand the concept of risk adjusted returns, because only when your returns are risk adjusted would that make sense for you to invest in that particular asset class. And then there are leverage trades and their implications. So when we talk about leverage trades, means that when you take leverage, means you as such have only, hypothetically, you have, as an example, you have only $100 in your pocket, but you want to do a trade of, let's say, $1,000. So that is a 10x leverage on the capital that you have. So if the price falls by 10%, all your trades will get liquidated and you will lose all money. So that's about leverage trades. Then we talk about the risk of leverage trades. So understand what are the margin requirements. Understand that you need to maintain enough or adequate capital in order to avoid liquidation. And do not go for highly leveraged trades, because with a minor correction in the price of crypto, and price correction is absolutely normal and frequent in the crypto market. So if you go for highly leveraged trades, the chances are you will lose everything that you have. So go for, even if you had to go for a leverage trade, even if you wanted, even if you have a small capital but you want to do a larger trade, and if you're doing a leverage trade, in that case, make sure that you're not highly leveraged. Go for a smaller leverage so that you have a chance to bounce back should there be a need for you to either square off your positions or take another position to recover the money. Let's say you've lost some money, so you will need more money to leverage that position and again create new positions. And then we go legal compliances. So a lot of exchanges, centralized exchanges, have AML and KYC compliances. In UAE, you will have to follow the VARA or the ADGM rules. For example, in UAE, which is United Arab Emirates, and people generally refer to as Dubai or Abu Dhabi. In such cases, there is VARA, which is Virtual Assets Regulatory Authority of Dubai, and then there's something called as ADGM, which is Abu Dhabi Global Markets, which regulates the crypto related trade registration and all such compliances in Abu Dhabi. Then in Canada, there's something called as FinTrack, which is the authority which regulates such licenses. And then in the EU, you have a new law and regulation which has come, which is called as MICA. And in India, there is something called as the FIU, or the Financial Intelligence Unit, through which you will have to take your registration and follow all compliances related to that. So in whichever country you're dealing, make sure that you follow the law of the land, because if you cannot follow the law, you'll be on the wrong side of the law, and law will sooner or later catch up with you, and you will have to face the consequences of law. So the only thing and advice which I always give people who are either in crypto or trading in crypto or investing in crypto or have their own cryptocurrencies, my extremely cautious suggestion to you is that make sure you follow each and every law and each and every regulation, irrespective of whichever country you're dealing in. And then a lot of people also ask that, well, can we start our own crypto companies? So the answer to that is yes and no, depending on the country you are from and the jurisdiction that you follow and the law that is applicable to you. So in some countries, the law allows you to start your own crypto. In some countries, the law does not allow you to start your cryptos. And in some countries, it is a mix of both. You are allowed in some cases, not allowed in some cases. So we will not concentrate on the other two cases where it is not clear. Give you information only about those countries where it is absolutely allowed. So there are a lot of Caribbean countries which absolutely allow you to start your own cryptocurrency. You are allowed to mine, mint, swap, trade, exchange, float your own currency, distribute that to people. All of that is allowed by the law of that land. So these Caribbean countries where it is allowed, the answer is yes, you could deal. So ensure that you select the right jurisdiction. And then there is a cost. There's a one-time cost to register your own crypto company. Then there is a recurring cost. Then there are compliance requirements of different countries. So depending on which jurisdiction you select, you will be able to know more about the cost or the compliance requirements in future. And as I said, I just said this before it came up on screen, always be on the right side of the law. Never miss out on any any compliance related issues, because the penalties are heavy in a lot of cases. In a lot of countries, people can even potentially get imprisoned if you are on the wrong side of the law. So please be compliant, please stay safe, please pay your taxes in whichever country and whatever taxes are applicable. And as I said, this presentation or this talk is purely and purely for educational purposes. This is not professional, nor legal, nor financial, nor investment advice. So with these disclaimers, I come to an end of this presentation. Thank you for joining in, and stay tuned for more such content on this channel. Thank you very much.